Hi guys and welcome to the trading show. This week we are gonna talk about
markets, grain stocks keep going. Our portfolio, S&P Rises. Tip of the week, focus on crude oil futures. And the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Hi guys, we broke up last week with equity indices attempting a recovery, which seems to have been successful. These are the returns of the last week, so the mini S&P leads the way with a return of 3.60%, so the equity indices are all positive, even the European ones. As for the energy sector, the previous week was strongly negative, but all futures have made a U-turn. Here we see, for example, the gasoline and the crude oil future. Finally, continues the trend of cereals that were positive even the last week, and you can notice that they show positive returns in all time frames: 5 days, 1 month and 3 months. Also noteworthy is the return of the Bitcoin future, which this week marks a return of around 6%. On the volatility front, with the markets rising for the second consecutive week, it is normal to see a decrease in historical volatility, even if on a longer time frame, such as the annual one, it certainly remains high. If we take a look at implied volatility, here the decline in volatility is more evident. You see we are returning to low levels and all the VIX index on the S&P are in contango. So this is another sign that stock markets appear to have stabilized. Anyway, the future remains uncertain due to the upcoming American elections. We talked about it in more depth last week, and we know very well that markets do not like uncertainty. So I recommend to be careful because volatility is still expected high in the future. After seeing some key statistics on financial markets and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Welcome everyone, I am Alessandro Danos and today I want to show you a trading system on the mini S&P 500 future, which is called Big Range. It is a reversal strategy developed on a daily time frame. We can see here this nice long trade of an amount of 2300. We can see it here from the list of trades. And to this amount we have to add commission cost and slippage rule of about, let's say for the S&P 500, $25 for each trade. So we can say that in general for this kind of underlying we can consider a commission cost of $25 per trade. If we take a look also at the equity curve, we can see that the equity is near the maximum, near the peaks. And also looking at the average trade sheet, we can see that the short side is a little bit poor, with an average of just $72. The long side better with 260, and overall an average trade of $220. Okay, now we can switch to the second system that I want to show you. There is a trend following strategy on the Bitcoin futures market. It was developed on a 60-minute time frame, and we can see it here that yesterday the strategy took this beautiful trade for an amount of around $800, and we can see it here from the list of trades. Remember that to this value we have to add a commission cost for the Bitcoin of around $50. Now, taking a look also at the equity curve of the strategy, we can see that in the last year, here we have just the last 300 days, we can see that the strategy is near his equity peaks. So it's performing very well, and we can see it also from the monthly period analysis sheet. We can see that from the month of June, the strategy lost just in 1 month, in August, for a not remarkable amount, and for this reason we can be happy for sure to see that in June and July, two very good months, then a little loss on August, and then on September another gain on 1800s. And in October, a flat month for the moment, with just $200 gained. Okay, now let's move to see the Titan, the software that we use to filter our strategies. We have set here a starting capital of 50,000 with a daily risk of 2%. The starting date is the 1st January of 2020. And the ending date is today, Friday, 9 of October 2020. We have just put into the calculation the sector of the bond futures market. So it includes the Bund, the German Bund future, the Treasury bond of the USA, and also the Italian BTP future. And we can see it here from the equity curve that for this year we can be happy of the results that this sector produced. But of course we also see that in the last period the strategy has reached near the maximum drawdown of this particular sector. But all in all, we can see here from the performance summary that the profits are still good enough to face the maximum historical drawdown that is around $14,000. So we had a net profit of around 44%, while the drawdown was actually 28%. Always remember that the starting capital was $50,000. So we can see happily that the ratio between the net profit and the drawdown is still positive, and also the equity curve for 2020 is almost always rising.
Hello everyone, and welcome from Andrea Unger. Today we will have a look to the details about the contracts on the crude oil. So we will analyze the main 3 crude oil contracts, future contracts, and the first one is the light sweet crude oil listed on the NYMEX exchange. So this product is probably the most famous future on the crude oil, and NYMEX belongs to the CME group, is a branch of the CME group, and the CME group, as we said other times, is most probably the biggest futures exchange all over the world, and it's based on Chicago. So this future has a contract unit of 1,000 barrels. So it means that for the movement of 1 whole point of the future, it will correspond movement of $1,000 for the trader who is trading this contract, and the tick size, so the minimum price fluctuation, is 0.01 point per barrel, and this value is equivalent to $10 for the trader. So for each movement of 0.101 per barrel, it will correspond a variation on the contract value of $10. For what regards the trading hours, you can trade the crude oil from Sunday at 6 p.m. New York time until Friday at 5 p.m. New York time. And every day from Sunday to Friday, there is a pause between 5 p.m. to 6 p.m. So crude oil is settled by delivery, and so you have to remember, of course, to roll the contract in time, because otherwise you will have to face the delivery of the products, unless you trade with some broker that doesn't allow you to keep the contract until the expiration, like Interactive Broker, for example. Having said that, we can analyze quickly the volumes of this product, and you can see usually it's a very liquid product. In fact, in the less liquid days, the volumes goes from 400,000 and up to 1,600,000 contracts per day. So you will be able most of the times to find a good price and a good counterpart for the whole session. So also during the night hours with very few contracts in general. And so we can consider this product in general as really liquid and pretty safe to trade. The second contract we will analyze is the E-mini crude oil futures contract. Also, this product is listed on the NYMEX exchange, that, as we said, is a branch of the CME group, and their trading hours are the same as the whole contract of the crude oil, but you can see here the contract unit is the half of the previous one. So the contract unit in this case is 500 barrels instead of 1000 barrels. But you have to pay attention, because in this case the minimum price fluctuation is 0.025 per barrel, and this is equivalent to $12.5. So the tick value is higher than the previous case, than the one in the previous case, but this is not because the contract is bigger, because it's smaller, to be honest, but this is because the minimum price fluctuation is higher than the previous one. So in general, for an undercapitalized trader, it's more advised to trade this contract because it's lighter in general. But you have to pay attention about what kind of strategies you are trading, because you need a higher average trade to trade this contract, because the slippage in this case is higher, of course, because the tick size in general is much more higher than the previous one. In general, crude oil gives to the algorithmic traders different and good possibilities. In fact, it works fine both with breakout and trend following approach, both on multi-day basis and intraday basis, and there are some other interesting bias that are working really fine on crude oil, such as the intraday bias, the intra-week bias, and finally also the intra-month and seasonals are working really fine. The last contract on the crude oil we will analyze is the Brent one, so the Brent crude future, and this product is listed on the ICE exchange, that is the Intercontinental Exchange. I don't suggest to trade at least initially this contract, because the ICE exchange is really expensive, talking about the about getting the intraday data in real time. In fact, the data feed for this market is extremely expensive on average, and it costs on average about $115 to $120 per month. So I would suggest for who is starting trading this product to start from the CME's futures. By the way, the contract size is the same as the first contract we had analyzed, so 1000 barrels per contract, and also the trading price is the same, so the minimum price fluctuation is the same and is 1 cent of per barrel. Talking about the average volumes on this product is even if here we can see just the main just the last session, in general I can tell you that it has a pretty normal liquidity, so good liquidity in general, and the liquidity of this product in general is anyway better if compared to the mini crude oil average volumes, and in fact the average volumes on the mini crude oil are not high in general, and they go from 10,000 contracts up to 20,000 contracts per day. That is a quite poor value.
Well, let's take a look at the rollover calendar. Next week the Linux future will expire, but I remind you that we have been active for some weeks on the December maturity. The following week we will be the settlement date of both crude oil and VIX futures. So next week, because typically the rollover on crude oil future occurs a few days in advance, there will be the rollover on December expiration. As for the VIX future, instead, we will have to wait until the following week. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call totally free with one of our tutors. We will talk about your current situation, what you are doing in trading, and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of the Trading Show.